Let's get rid of that. We don't need that. So it's a new feature. A countdown timer. I don't know what I'm going to use it for. I'm always ready. Always ready to go on and do the show. Always ready to podcast. Always ready to trade. Am I always ready to trade? How you doing, friends? Ernie here, and this is the 0 Days to Expiration podcast, and this is episode number 75, entitled, the subject matter for today is the times you shouldn't take the trade. I know that seems antithetical to everything that we do, because every day we get prepared. We come to our desks, we clear our minds, clear our desks, maybe. We look at the market, we look at the charts, we get settled on what we might want to do, look at possible setups, scenarios, etc. And we're ready to trade. We want to trade. We got to be in the market. But for one reason or another, nothing sets up. It all doesn't look right. And you can't find that perfect opportunity, or any opportunity. Should you go ahead and trade anyways? Or is there a reason not to trade? You hear many people say that taking no position is in fact a position. There are basically three things that you can do. You can go long, you can go short, or you can do nothing at all. Of course, long and short are pedestrian ways of looking at the market. We don't look at it that way. You could also just hang out. Let time be on your side. Trade time, trade volatility. There's been this other axiom that I've heard that says less is more. Trading less can actually result in greater profits. That seems not to jive, right? How can you trade less and make more? By trading less, that's implying that you're only taking setups that you believe are of the highest quality. The best trades on the planet. You limit yourself to only those best setups where you feel like you have 100% confidence. Well, nobody has 100%. But way more than what you normally have. And you feel good about it. You feel comfortable. You feel like this is the time, and you enter the market. And then there are other times where nothing works out. Now, we had something similar to this in the past month, and I'm sure that many traders felt the same thing. There was a general liquidity crunch in the entire market. Liquidity was at its lowest point in the month of January 2022. Than any other time since the great crash, not the 2008 crash, but the great pandemic crash, March of 2020. Liquidity just dried up. There was nothing. Of course, all you really had to do is just go long, and if you had the foresight, you would have made a bundle. But trading was extremely difficult. This past month, in January, it's shown that liquidity is at an all-time low relative to that time. That makes it extremely difficult to get into a position. When you don't have liquidity, there's no counterparty. Well, there are counterparties, but there aren't enough. There aren't enough people to play with you. If there aren't enough people to play with you, your trade sinks. You can get into something called a liquidity trap. Now, a liquidity trap hurts people that are short in the market or selling short, selling options. And that's when you get into a position, and by all other measures, if this were any other time, you can see a clear path for getting out. And you're in position, you know that if under normal circumstances you had advanced that market and it had gone up 10 or 20 points, you could get out with a profit. But for some reason, the profit's not there. There's nobody there to take your trade. And if you executed the trade, the spread's really wide, you'd actually lose money in a position that any other time you would make money. Recognizing those situations, it would be great if you could recognize that before you even started that trading day, and just decide, I'm going to pass. I'm going to pass on today because the odds aren't with me. The market isn't with me. The conditions aren't right. All right, so that's one situation. And you can come up with a million different types of situations where the setup isn't there. The risk to reward doesn't meet your criteria. Liquidity isn't there. Volatility is non-existent. The market is choppy. You can come up with all of these reasons. So the big question is, what should you put heavier emphasis on? Should it be on finding reasons to get into the market? Or should it be finding reasons to only be in the market if it's to your advantage? I guess saying it another way is finding reasons why you shouldn't be in the market. Which is more powerful? Think about that. Is it more powerful to find reasons to be in the market or find reasons why you shouldn't be in the market? And I think that the negative case is probably more powerful. Trading less is, or doing less is more. Because if you're only taking on high quality positions under high quality situations, so it's more than just the market situation too. It extends way beyond that. Because everything has to be right, right? Trading is in large part a mental game. You have to be of right mind, of right spirit. You have to be aware. And so that means that you need to have a level of attentiveness, clarity, sharpness. You must be awake. You can't go into a trading situation with 2 hours sleep. You're putting yourself at a disadvantage. Why would you do that? So there are more reasons than just the market condition. It's a wide range of conditions. All of these conditions, the environment that you're in, the market, your personal welfare, the lighting in the room, the people around you, the level of distraction that might be there with you, all of that stuff needs to be controlled so that you're in the best possible position where there is no reason, you cannot find any reason not to be in the market. Then you can be in the market. Seems to make sense, right? What other things can prevent you from being in the market? You could, I had mentioned that you could be tired. You might not have enough energy. Maybe you didn't have a good breakfast if you eat breakfast. Maybe you didn't. Well, let's talk about some ways that you could prepare to be in a situation mentally and physically before getting into the market. Should you be just crawling out of bed and then to your trading platform and fire it up and then be ready to go? Is that the right situation? Did you know that if you performed vigorous aerobic type exercise or anaerobic, even anaerobic exercise prior to doing whatever you're going to do, for the next couple of hours, your body is like this machine. It's a gyro, a generator. You are creating new synapses. You are actually smarter after vigorous exercise for about 2 hours. So maybe that's something that you should do. Wouldn't that be an advantage? And maybe you could, if that is true, why wouldn't you in the morning make sure that you had some vigorous exercise before you sat down and started trading? Wouldn't you want to enter the market smarter? Or do you want to enter the market a dumbass? And you could probably do that for, let's say that you trade during the day, and the primary times that most people trade are right after the market opens up until about, between 9:30 and 10:30 or 11. And then again in the afternoon from 2 to the end of the day. So maybe it makes sense to have 2 periods where you get yourself some vigorous exercise and put yourself in the right state of mind, the right physical state to give you the optimal conditions in order to enter the market. So it's more than, do I have a setup? It's much more than that. You could have a setup, and if you cannot clearly articulate why you should be in that market and what your position is and what's the reason for being in the market from a mental acuity point of view, then why would you take the trade? Why would you put yourself at a disadvantage? So there's a lot of reasons why you shouldn't be in the market, why you shouldn't take that trade. And overall, I believe that it's more productive to find ways or find reasons why you shouldn't be in the market rather than why you should be. You know, we have a lot of opportunities. Like with 0DTE, we have 3 opportunities every week. And some people might think that, man, it's only 3 opportunities, Ernie. If I don't trade one of those days, then I only have 2 more opportunities that week. And for some people, trading is this sort of aerobic exercise, right? They have to be in it all the time and constantly pounding the keyboard, putting on trades, taking off trades. It's the activity that energizes them. But is that in fact optimal? Are you getting and using your best setups, your best attentiveness, your best concentration, your best mindfulness? It's all about making money. You could go the other way and say if we're going to go the negative route, it's all about not losing money. Not losing money and advancing your position, getting a little bit better than before. If you could go about minimizing your losses and only choosing the best possible situations, even if they only give you incremental wins, overall, it's like the tortoise and the hare type of scenario, right? The person who is deliberate gets into the market on only the best setups without any kind of encumbrance, with total clarity, total mindfulness. Those are the people that are going to do well. If you're searching for a trade, if you're trying to make something or generate an opportunity, that's like recreating your strategy on the fly. Probably don't want to do that. Now, today was a perfect example. Normally, we're looking for a catalyst, something that will exert some energy into the market. Sometimes that happens from an economic report. Sometimes it's left over from the night before, the Globex market or the European market. Sometimes there's a Fed governor, or today there was Christine Lagarde, Le Beast. That's what I call her. She was going to talk about inflation, and she didn't say anything of any worth, quite frankly. And maybe she would add some energy into the market. Never happened. But we came into the market from the Euro market. It's a Monday, no economic reports. The market is flat. Liquidity is down. Can't find a trade. So you start looking at, well, what if this happens? So you create these scenarios in your head. Man, if it comes up to this point, then maybe that'll be a good place to take a short. But you don't know. And who's to say that it will be a good place to take a short? Well, because every time it got up there before, it went down. But the market's dead now. Liquidity is down, volatility is down. The market has been flat all morning. Maybe it's just not your time. Maybe you just need to just chill and say, okay, no trade today. And that's what we did. No trade today. Hey, it looks like we have some questions from some comments. Blue Resonant Monkey, that's a great name. Exactly right now is no time to trade. Today particularly is if you swing, unless you're scalping. I would say even with scalping, there's volatility is down. Volatility has been dropping dramatically since last week, since Wednesday of last week, and particularly on Friday. It bumped a little bit today, but there was no real activity. The expected move was this big, but in reality, it was only this big. And with scalping or any kind of short-term activity, you need that energy so that you get the range. Now, today we had really just two moves. One that came subtly down and then flooded away, and then now near the end of the day, it just started to creep up. Hard to scalp things like that. Hard to find an edge or a crack where you can stick your wedge in there. So let's see. That is no life what you are describing, but lucky. You got to decipher the madness that is occurring in these markets. The market will rally. Let's see. We're going to read this. See what's going on here. This week to the next golden ratio. Oh, my God. The golden ratio. Of course, that's where it's going to go. Anyways, look, you could just place something out there. You could throw something to the wind, even though there isn't any real energy in the market, even though there isn't any real setup, and then take your chances. You could do that every day. You could flip the coin. You could be a monkey that throws crap at the wall. That doesn't make you a trader. And that's not necessarily your craft. That's not what you're here for. We have specific setups that we're looking for. We have a specific process. And if the process isn't there, if we can't initiate it because something's missing, then the process is dead. It's okay not to trade. Like me, blue resident monkey. Yeah, maybe you are one of those monkeys that throws your crap against the wall. I don't know. That's the message of the day. It's something also that you have to come to grips with, too, because we all want to be in there. We all want to make money. We're all, especially if you maybe came off a bad streak or something. You want to get it going again. You want to rev it up. That should be especially the time where you should be even more cautious and looking for more reasons not to enter the market. Only on the best possible setups and situations, under the best conditions, under the best mental awareness. So that should be, in my view, the natural stance that you should enter the market. One where you have your hard-earned cash that you have in your hand and you're willing to put it to play. But you're not going to put it on anything. You want to put it on something that has great odds, little risk, great energy in the market, clear setup. That I can feel comfortable putting my money down. But if I have to guess just for the chance that I might be right, I don't think so. It's better not to take a position. It's better not to trade that day. That's about it. I talk about all these different things every other podcast about your setups, the strategies, your methodologies, and how you do this, how you do that, and it's all activity, action-oriented. But I've neglected to probably include what is, I think, the most important thing, and that is you have to have a good reason to get into the market. Unless you have that great setup, it's just not worth it. Some people might argue that sometimes some of my best trades have been from a fat finger trade, or I tripped over a wire and smashed the keyboard, and magically a trade appeared, and it was my best trade all year. Then maybe you should start taking note about what your trading is all about. We're done here. Thank you very much for showing up. This was kind of a negative podcast, kind of boring. Next time we'll liven it up, all right? Thank you very much for showing up here. Really appreciate it. We'll see you next 0DTE day. That will be Wednesday. Take care and peace. Gotta find that off button. It's way up there.